Thank you for the introduction. So before we get started today, I wanted to share a little bit about myself so that you'll have an idea of who's talking to you for the next 20 minutes. So I'm 37 years old. I have a 1-year-old son named Xander and a dog, a Poodle Bouvier cross named Winnie the Pouvier, which is affectionately named after my hometown of Winnipeg, Manitoba. My husband and I moved to BC in 2008. So if you've ever had a major relocation, I can relate. I've been in the financial services industry for the last 16 years. And in my career, I've been everything from the receptionist at a managing general agency to the president of a 44-year-old independent financial planning firm. I used to work a ton of overtime, but since having my son, I seem to spend all my free time trying to find his sippy cup as I chase him around our house. So as I'd mentioned, we're in BC. If you're also in BC, check us out. We'd be happy to meet with you. So you're here today because you want to learn how to take actions that will secure your financial future. So far in the conference, and tomorrow as well, we're learning about ways to change our lives for the better and to grow our assets. I want to talk about the greatest asset that you have. It's not your house. Even in this crazy real estate market, it's not your car, and it's not even your investment portfolio. You are your greatest asset. As you improve as a person, your value increases, and every investment in yourself has the potential to enrich your life and the lives of those that you care about, both financially, in your relationships, and in every other area that you work on that you deem to have value, including your career. So think about the value that you generate that is completely unique to you and to your life experience. It's the time you've spent training for your career, the hard-earned experience that you bring to the table, the successes you've had so far, and the relationships that you manage. All of these things are packaged together as you, and you take them to the market every day to benefit your employer or your customers directly. All of the goals that we set for ourselves, all of our hopes and all of our dreams, including our desire to one day retire off into the sunset, are based on our ability to continue to provide our services in exchange for the money that we earn. Sorry a second, having some trouble here. There we go. But if there's one thing that's certain, it's that in this world, you have to expect the unexpected. Life is chaotic. You can do everything right, and by no fault of your own, things will still not go to plan. I've been there, and if you have too, you'll know that sometimes we can't control the things that happen to us. We need to focus on the things that we can control as we build our plans. We want to make sure that we've done everything in our power to make our goals a reality, and part of that is being prepared when life tries to derail your dreams. Every financial goal that you set for yourself is reliant on the money that you anticipate that you'll earn in the future at your current salary and beyond. Income replacement is an absolutely critical part of managing the risk of the unexpected, so that if there ever comes a time in your life where you can't earn an income, you can continue to pay your bills and provide a good life for yourself and your loved ones. This is what it means to be unstoppable. No matter what life throws your way, you're still on track to achieving your financial goals. You're able to provide for yourself and for your family. You can maintain your same standard of living, and you'll be able to retire comfortably when the time comes. So I'm going to get a little bit personal for a minute here and share from our life. When I started in the industry, I was most interested in investments, and I spent my time and my energy developing that skill set. So this is my husband here. This is our dog, Winnie the Pouvier, and my son, Xander. My husband and I, we had the goal of being debt-free and mortgage-free. And I was completely obsessed with this goal, to the point where I even wrote a personal finance book about it. But we used every dollar that we could find to get there sooner. My husband worked delivering the mail, and he had done so for 7 years. And then we had what I now call a one-day experience. One day, we woke up in the morning and it looked just like any other day. I couldn't tell you what the weather was. I couldn't tell you what we had for breakfast that day, but we didn't know at the time that one day our plans would change in an instant. My husband had an accident. He had a concussion, and it left him with a motion issue where he had difficulty doing his job. It took seconds for the accident to happen, and it took 5 years of recovery, retraining, and lost wages that set our family back about $300,000. All of our financial plans, our goals, and our dreams, and our income projections were out the window instantly, and we had to reset and rethink our whole financial future. Having had this experience, I tell every single person that comes into my office that while saving and investing and goal setting are very important, protecting your income is the most impactful thing that you can do today to take care of yourself and the people you love. Since then, I've been developing my technical skills in that area, and I've even received a designation in living benefits so that I can help protect my clients from finding themselves in the same position that we were in. So think about yourself and the value that you bring to the table in the workplace. Put yourself in our position where your income suddenly stops. What would happen if you could no longer do your job? Who is relying on you to continue to have the same standard of living? Is it children, a spouse, or a partner? If you're on your own, it's even more important as there's no safety net beyond the one that you create for yourself. There are bills that still need to be paid. Your mortgage and your rent doesn't know that you've stopped working. So where will the money come from? From what you've accumulated so far, how long would your savings last if you had to use it to replace your paycheck? And once you've used up all your savings, which goals and dreams would you have to postpone or give up completely? How would your identity change? This is often overlooked in a discussion about finance, but we're so entrenched in our career and we derive personal value from our titles. How do you define your value as a person? How would you pray for retraining? And while it's the last thing on your mind at this time, how would you fund your retirement? Would your plans be put on hold? Or how long would it be before you would have to give up on perhaps the same level of comfort in retirement that you were expecting previously? But maybe the most important question is, how much time could you take off to recover and make these life-altering decisions before you and your family had trouble paying the bills? So from a purely monetary point of view, we can put a dollar value on your career by looking at the amount of money that you'll earn from now until the time you retire. Take your annual income today and multiply it by the number of years you have left to retirement. So for example, if you're earning $100,000 a year, you'll have $3.5 million come through your hands during your career, not counting wage increases over time. What would you do if this was gone? If this is what income replacement is all about. When you purchase an income replacement policy, you're covered the moment your contract is settled for most of the money that you'll earn over the remainder of your entire working career. Self-funding for disability insurance can be incredibly difficult because it represents years of wages that you haven't yet earned and therefore cannot save. So at this point, people will say to me, Christine, you're talking to the wrong person. I don't need to hear about disability insurance. I've got it covered. I've got a group plan at work. My husband had a group plan at work too, and it would not cover his circumstances. That's why you need to review and understand your plan very, very carefully to see how much it will pay, under what circumstances, and for how long. Most group plans do not cover a partial disability, which is how he was classified. You need to be considered fully disabled by your doctor and a reviewer from the insurance company before a claim will be approved. Even if you are fully disabled and qualify and go on claim and are receiving benefits, most group insurance contracts have a change of definition at 2 years that can cause your benefits to stop. When the disability definition changes, it usually goes from having to perform the duties of your regular job to any occupation. You do not want a contract that will only pay out if you can do any occupation. This does not protect the value that you've developed in your unique career. Any occupation is very broadly defined. If you can sit and answer the phone, you can work in a call center. If you can stand on your feet all day and work a cash register, you can do retail. It does not matter if you were specially trained and have years of experience in your field. When the definitions of a policy change, a group insurance policy will not value you. All that will matter is that you can work any job. Group insurance policies are low-cost disability coverage, and by that right, they're also low quality, especially when you need to compare it to an individually owned plan that you have to qualify for to get. So if you and I were sitting down today and we would talk about your career, we would talk about what you've accomplished so far and where you see yourself going in the future. We'd also look at your assets and your liabilities, and you'd tell me about the people in your life that you care about, especially those who are dependent on you financially. With this information, I could look across multiple insurance companies and find the right company, product, and fit for you. But the first thing that we would look at is you want to find a contract that is non-cancelable. This means that the insurance company cannot make a change to your contract after it's issued. Believe it or not, there are contracts out there today where the terms can change after you've taken out and are paying for a policy. So please be very, very careful. Disability plans are not created equal, and you don't want to be paying into a plan that falls short when you need it the most, or find out that it's not what you've expected. Other plans could have built-in exclusions or limitations where they will not cover certain conditions. For example, some policies will not cover mental health related illnesses, which is a very real form of illness. It's just more difficult to quantify than, say, a broken arm or a broken leg. You want a contract that will protect you until your desired retirement age. And for a lot of people, that's to 65. To save costs, some contracts will only pay for 2 or 5 years and then stop providing coverage. While these can help with short-term disability, you're leaving yourself vulnerable and unable to get a new contract if your disability lasts longer than 2 or 5 years. You'll also want to consider partial disability or residual disability, which represents a loss of time or a loss of income. Next, you want to see how your policy treats reoccurring disabilities or multiple claims. A future insurability option can allow you to increase coverage by a predetermined amount without needing to apply again. Some of the features and plans will cost more than others, so part of building a contract that's right for you is weighing the cost of that feature to the benefit that you receive. You'll want to work with a professional for an independent firm that has contracts with multiple insurance companies so that they can find the best fit for you in terms of product and price. One of the other added benefits is that you are covered 24 hours, so it doesn't matter if you have an injury at what point in time it happens. So far, we've been talking about income replacement as disability insurance, but there's another type of living benefits insurance that can really help by providing an infusion of cash at the time of need. I'm referring to critical illness insurance, and it will pay out a lump sum tax-free as long as you've been paying the premiums yourself. So last month in my practice, we had a 64-year-old woman get a $500,000 tax-free payout less than 3 weeks after receiving her diagnosis. At an incredibly difficult time in her life, she can now focus on recovery because she's now received a life-changing amount of money. While disability insurance focuses on replacing your paycheck, critical illness insurance can be used to take care of the lump sum needs that you would want to address. Do you have a mortgage balance that you would like to pay out? Do you want to be able to go on a vacation once you've recovered, or have your spouse have some time to take off work to help you out, or even have the ability to skip the waiting line and get medical care sooner down south? Critical illness insurance can be structured to fit different budgets and different purposes. You can choose a plan that will cover your working years. This is term insurance. It will protect you if you get sick, if you still need to earn an income, and it can even help you accelerate savings for retirement or stop working earlier than originally planned. Then there's permanent insurance, which will pay out anytime during your life if you get a diagnosis with a covered condition. When people say, it won't happen to me, I often think quietly to myself, we didn't think it would happen to us either. Most people are optimistic about the future, and this optimism can actually hinder us when we're talking about risk management, because we think accidents and illness will happen to other people. Statistically, though, it will happen to someone you know. Just think about the people you know personally who've had cancer, a heart attack, or stroke. All of these are covered conditions in most critical illness contracts. While you may not be able to return to your work or the work you did previously, you can secure your paycheck. I've made this major mistake in life for you. Please learn from it and save from yourself the stress and the regret that comes from these types of situations. Don't do what we did and try and save a few $1,000s and lose out on a much larger amount. If you don't pay an insurance company to take the risk, by default, you've agreed to shoulder it yourself, and it's not just on you, it's on your entire family. I now own the highest amount of disability and critical illness insurance that I was able to buy, and I know that no matter what life throws my way, I can provide for my family, even if I physically can't. For me, that's empowering. Rather than seeing the premiums that you're paying as taking away from your goals, use those premium dollars to protect your goals and increase the likelihood that they'll be achieved. You're ensuring your goals by insuring yourself. Value yourself and value your accomplishments and your career by purchasing income replacement insurance and critical illness care insurance. So just quickly, as we wrap up, a little bit about myself. I recently launched a podcast called It's Personal Finance Canada. Our next episode is going to be an expansion on this talk. Just due to time, I had to skip over a few things here. And I'm also relaunching my book, The Debt-Free Lifestyle, on January 1st. So much has changed right now out there that the new version is much more up to date and with some actionable items that can help you if debt-free life and mortgage repayment is part of your journey. So thank you very much and take care.